Hello investors and traders, today I'll speak about dividend stocks, dividend investing, passive income, and of course I think it will be the best dividend stocks to buy it right now. So let's start with the first company for today. It's Philip Morris. It's a tobacco company. Its stock price about $100 for now. And for the beginning, let's start with it. Technical analysis, let's have a look on its chart. Here we see, in my mind, it was impulse since the end of 2020. It was the first wave, the second, the third, the fourth, and the fifth. By the way, usually we see that the third wave is the largest wave in the impulse, so here the impulse looks very organic, and then in my mind it was a correction, clean ABC move, ABC correction. And by the way, usually the correction is finishing at the fourth wave at the previous impulse. So here with this chart, I think its probability of its accuracy it's quite high. So now I think generally speaking, the correction is finishing, and we may see its stock move higher. We can get out from this correctional formation, and I think we will see the stock much higher in the next weeks. By the way, the dividend yield of Philip Morris is very impressive. It's 5%, even more than 5%. Let's have a look on its fundamental parameters. So look, the market cap is about $150. The dividend yield is 5.15%, and the PE ratio, price to earning, is about 17. So what we have here, the expectations for the EPS that it's expected to grow in the next quarters, and of course the revenue also. If it last quarter it earned about $8 billion, so we may see that about 3 quarters from now the analysts and the investors expecting this company to earn more than $9 billion per quarter. The dividend yield, we see it's quite stable, 4%, 4, even 5 years ago it was more than 6%, 5. So of course it's a dividend stock, and let me check the marginality. I would like to see the before the EBITDA margin. Yeah, we see it's very impressive. All the last, it's a quarterly. Let's move to the annual data. Yeah, since 2016. So the EBITDA ratio is EBITDA margin is quite impressive, more than 40%. The last figure is 36, and the net margin, net income margin, we see also very stable, 26%, 28%, and the last about 30%. So by the way, net margin is this company has the same marginality like Google, like Apple, like Meta, so very high marginal company. So it's very good, very positive sign for the investors. We see that the marginality is about 30%. The revenue of this company continue to grow. So it's one of the reasons, one of my favorite dividend stocks for now. And of course, 5% dividend yield for me, it's quite enough. Let's move to the next stock for now. For today, it's Broadcom. So Broadcom, it's electronic technology, semiconductor company, semiconductor area. Its performance at this year is it's up more than 2% since the beginning of the year. If we'll check the chart, in my mind, yeah, look, I think it was the first wave, the second, the third, and the fourth, the correctional one. Here I think the correction is finished, and now I'm expecting to show this stock to see a 5 wave move. So I think we may see the stock higher than 660. So in this case, there is I think a probability to grow at least 70%. By the way, look here in such in this chart. Usually the third wave is the largest wave in the impulse, and also we may see the second wave is a sharp, and the third wave is a flat. So usually also in the impulse we can see such relations. And dividend yield more than 3%. I think it's I think for now for such market it's quite enough. Let's have a look on its fundamental parameters. So market cap more than 200 bucks. It's a company that bigger than Philip Morris. The dividend yield 3.2% and PE ratio 22. By the way, here it's we can see that the marginality of this company even improving. Look at the fourth quarter of 21 is 26%, then 36%, and the last data, it's unbelievable. Oh my god. Oh, I can't believe it. The marginality net profit margin is 37%. So it's really a lot. It's unbelievable figure, but yeah, it's reality. The payout ratio is 62%. It means that 62% from its net income the company pays as dividend. So here I think there is room for the company even to increase its dividend payments to the shareholders. So the payout is here quite nice. Let's have a look on the dividends. By the way, it became such a dividend stock only last years, I guess. 3%, 3.6, 3.7, less than 3, and the last data is about 3.5%. So the dividends, the company is a dividend co, yeah, cash flow co. So it became just last years. And the expectations. Let's have a look the annual data. Last year it's earned 37 billion per year, and 3 years from now it's expected to earn the EPS. Oh shit, really, the EPS earning per share, so it's a lot, 45. So the earning per share expected to grow, and the revenue also. Last year it was 33 billion, and 3 years from now 38 billion. So the earnings and the revenue expected to grow. Let's have a look. I would like to see here the PE ratio, if it's okay. Yeah, we see that now it's quite high, because look, here the PE ratio was about 70, 60, 50. So it's we see that it's quite it's a very expensive PE ratio. Now it's only 22. I think it's somewhere near the average. So 22 PE for such a high marginal stock. I remind you that the net margin of this company is 37%. So quite impressive figure. So Broadcom with the ticker AVGO is the second dividend stock for today. Let's move to the next stock for today. It's Jefferies Financial Group. So it's a finance company, it's an investment bank, investment broker. So Jefferies has dividend yield more than 3%. If we look at the chart, I think he's a major level support and resistance about 30 bucks. Everything if the stock traded more than 30 bucks, I think it's signal to buy. If it's lower, so maybe it's time to sell the stock. So now of course we traded 37 bucks, so I think why not to buy this dividend stock with a dividend yield more than 3%. Let's have a look on it. Fundamental parameters here. What do we got? We see that last quarters it's still a profitable company. The last data is net profit margin more than 6%, and the revenue of these companies continue to grow market cap about 8 billion bucks, and PE is quite low, it's only 12. The payout ratio also very low. I think it's the lowest from the all previous company, from Philip Morris, and of course the Broadcom, only 40%. So it's a very good signal that we really may have a look at this stock. So Jefferies stock is the third company for today. I think it's can be also a nice company for your dividend portfolio, and of course one of my best and one of my favorite dividend companies, it's AT&T with the ticker T. So if we look at the chart here, I think it was the first, the second, the third, the fourth, and the fifth. So I'm expecting another move up, we may see the stock higher than 44 bucks. Here it was a few corrections, ABC, and another ABC, and also here the major support level since the beginning of the 21st century is 15 bucks. So it's a very strong support level, and now it traded about 19 bucks. By the way, the dividend yield is around about 6%. I think it's very impressive for AT&T, such a huge company with market cap more than 100 billion bucks. Yes, dividend yield more than 6%. By the way, it showed a loss last quarter, but I think it's not so significant. Let's have a look on the expectations of AT&T company. So EPS, earning per share, is expected to be very stable, and also the revenue for the future years also expected to be stable. We see a slight decreasement for the previous years, but generally I'm sure that AT&T it's quite stable and huge company. It's by the way, it's a dividend king. It's increases its dividend payments I think more than 50 years. So AT&T it's continue to be one of my favorite dividend companies for now. So it was my overview of 4 dividend companies, 4 dividend stocks, the best dividend stocks to buy right now. If you like this video, of course, press the like button. Don't forget to subscribe to my channel, and see you on the next time. Bye.